Hello traders, welcome back to the channel. This is Juno with Trading the Charts Pro. And guys, we're back with one more video where we're using technical analysis to break down the overall price action in the market to see, what is coming up or what is price action actually telling us that we need to be expecting or be looking out for in the market in this upcoming week. All right, so based on the thumbnail, guys, you kind of see the direction that this video is going to go. So basically what I'm going to do, I'm going to take some time and dive a little bit deeper and break down my view of why do I feel like, this chart is showing me that there's a potential setup where we can anticipate a head and shoulders pattern coming up, to be played out over the next couple weeks. All right, so I'm going to show you the critical levels where if these levels basically don't hold up from a technical point of view, then it would be really opening the door for this head and shoulders pattern to play out. All right, so basically right now we're looking at the S&P 500, and in the S&P 500, guys, we'll see where the market made its high around 4,818, right? But prior to that high, while the market was moving up, it hit its last high here back in August, September, and the market pulled back. Now, as we put the pieces of the puzzle together, this is how we navigate and know, okay, what's coming based on technical patterns that we've seen played out in the market before. All right, so we had that pullback, or the market move up, and over the last couple of weeks the market pulled back, and last week the market bounced. All right, so if you're not putting all of these pieces together, there is a probability that you could miss this. So basically, right over here, this was a high for the market pulled back, made a low, it ran up, it made a new high. Right now the market pulled back to basically the same low right here. Let me change this color. Market pulled back, same low as here. This was a high, but it became a lower high as the market moved up and made a new high up here. All right, so this is the peak. Market pulled down, made a low. So this week, this is where it started to get critical. The market tried to rally, and the market put in a lower high. All right, so this is pretty much where I start to watch and see, okay, what's going to happen now that the market came back right here to support. There's only two ways the market technically can go, right? Based on the weekly chart, the market can actually bounce here at support where it did here, boom, bounce, and we get a W bottom, double bottom, which is one tap, two tap, and it becomes a W pattern that end up pushing the S&P 500 back to the upside, right? That's one way that the market can move. The next way is if the market actually take out this support here that I'm looking at, right inside here that it bounced 3 times before. Now what we start to see is that the market basically start to trend. And where is the trend going? The trend has literally started to move to the downside. So, I want to be cautious as the market approach, or as we approach next week, because man, this support level right here is the only thing that is holding the S&P 500 where it's at right now in terms of being stable and not breaking down. So switching over to a daily chart, and we can start to see a little bit more detail in terms of what's been going on. The market made its high here, pull down, boom. So we see every time the market practically rallies, it's not going as high as it was going before, right? So this is pretty much telling us that there's a high probability, if our 4,300 support, where the market closed roughly into that zone on Friday, if this area breaks down, guys, it's look out below pretty much is what we'll be expecting from the S&P 500 if 4,300 gets taken out. All right, but there's one a little bit of a caveat in terms of what I was seeing in the market on Friday is that as the market comes down, the market wasn't really coming down fast. So it seemed like there is volume slowing down, at least for the moment. as the market slide down. So it's coming down. I have some shorts, but they're like just dripping like tick, 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 tock, tick to the downside, which is super annoying because, for the most part, normally when the market goes down, it's, boom, we're jumping through the window and this thing going straight down. So it may be a possibility that we will get a hold here again, and we try to bounce and start to move back to the upward side. All right, the market is still down below its 200 SMA on the daily time frame, so we got to keep that in mind and don't get too carried away that this thing is ready to turn around ASAP. All right, but as the market comes into this upcoming week, the critical level again is going to be 4,300. The market can break down a little bit, but if it does break down below that level, we need to see strong buying action coming in into those levels, start to take it back out of that level, showing us that the market does not want to close, or the S&P 500 doesn't want to close below 4,300. And at that time, we start to pick up a little bit of something in anticipation of the turnaround. All right, so let's move on over, look at the Dow Jones. Guys, Dow Jones, same story last week. We talked about this thing. We are waiting for it to pull back down to 33,500, and when it gets to 33,500, then we will start scaling in a little bit in anticipation of a bounce here to move back up, just like the market did in this zone prior. So there's nothing new with the Dow Jones, nothing to worry about. This is just typical. We're in a sideways market for the for the Dow Jones, so we're waiting for this thing to pull back to support, and when it gets back to support, we'll be looking to softly get long again in anticipation of a move up. Break down and start to close below support, then all bets are off in terms of a long trade for the Dow. All right, so keep an eye on that. Let's move on over to the Russell 2000. Actually, let's do tech before we move on over to the Russell 2000. All right, I know, guys. So for S&P 500 looks bearish, right? From the perspective that I'm seeing a head and shoulders pattern, which a head and shoulders pattern simply indicate that the market was trending up, and now the market is starting to trend to the downside. All right, so that's how we know that the pattern is changing, because in a head and shoulders pattern is just the market changing from an uptrend into a downtrend, and they happen immediately. So as the uptrend finish, the market turn around and start to trend down. That's all a head and shoulders pattern is. All right, so when we look at the NASDAQ, it doesn't look as structural in terms of, do I see a head and shoulders pattern in the NASDAQ? So if there was a head and shoulders pattern setting up here, this section here, right around this 15,600 would be, where the second shoulder would need to form. But when the market approached this level, realized that the market didn't pull up as high into this level. So as it is right now for the NASDAQ, we're just looking to see, can this thing continue to hold 14,000, right? We came down into that level very strong on Friday, a little bit of buying, nothing to say, okay, I need to start going long here. It means more to me. I start watching and see, can we get the bounce? Because as it is right now, we just have a very clear double bottom on the NASDAQ NDX, and we need to see the bounce out of here for this double bottom to even confirm. If we don't get a confirmation bounce on the NDX, then I'll be watching for a breakdown to take this thing back or down to 13,000. And then when we get to 13,000, what's next? We just keep monitoring and see, what does the market do from that support level. I would anticipate we'd get a short rally, probably back up to 14,000, and then we probably can start trending down lower. All right, so the market is really starting to get into a tricky place right now where we just got to watch and see what happens. I'm still to the downside. I'm still short bias. I'm not ready to close out these shorts as yet because for real, there is nothing in the market or in terms of price action that is obviously showing me that, hey, I need to close out my shorts and start moving to the long side. What would it take for me to close my shorts out? Well, I'll need to see a confirmation strong bounce at this double bottom for NDX, and that would, probably scare me out and tell me I need to start setting up for the long side. All right, let's move on over to Russell 2000. See what is Russell 2000 telling us on the big picture, or even just on the daily chart. Looking at this thing, guys, what is the most dominant pattern that we're seeing right here right now in Russell 2000? It is this very clear downtrending pattern, guys. So right into Thursday, this market broke down as it hit its head into the resistance at 2075, and we see sellers come in and this thing continue to move to the downside. So I'm still bearish on the Russell 2000. Nothing in this thing is telling me that, hey, this is ready to turn around. I'm short into 1,925, and then just like that other market there, S&P 500 or the NASDAQ, would look for the double bottom. Does the double bottom hold and start turning this thing back around, or is it gonna be a case where this market come down, put in a new low, and then this thing continue to slide to the downside? So the main reason why I even come in here and do these videos, guys, is to show you that from a technical point of view, you can actually see what's happening and you can ride the patterns based on structure. What is the structural pattern that this thing is showing us? Long term, we're in the weekly chart. Russell 2000, this is bearish. The weekly chart is bearish. So if the weekly chart is bearish, when we go back to the daily chart is also going to be bearish. The same dominant pattern that is present in the weekly chart is going to be present in the daily chart. And if you even want to go down to a smaller time frame, that same dominant pattern is going to be prevalent, is going to be obvious as well. So that's why we do an overall analysis, to see where should it end, where can we jump in and continue to ride it to the downside, right? So as it is right now, Russell 2000 price is at 2009. I would still be short this right here. My short will still be here. Max risk is above 2075. Where is my target? My target is gonna be into 1925. All right, so that's how I'm looking at the Russell 2000 going into next week. There's one more thing that I want to show you, why I also feel like we will be getting more downward pressure, is looking at the VIX on the weekly time frame, where we can see that there's some changes in the VIX, man. The VIX is starting to, we had a nice support here that just would not break at 15. Now there was this downtrending pattern here. We break out one time, pull back in, break out again, and here the VIX is, in my opinion, starting to ride higher lows, right? So is this thing gonna just continue gradually rising up? If that is the case for the VIX, then we'll continue to look to see the market dip lower and lower until the VIX start turning back around and start settling down back into the 15, which is the lowest it seemed like this VIX want to be settling at, right around here from March last year till now, where it's trading at $27-30 right now. So guys, this is my overall view of the market for this upcoming week. If you have any questions, just throw them down below. If you watched the video till this point, thank you for watching, and I look forward to see you in my next video.